All right, everyone. It is 12 o'clock and we are about to get started here. Just wanted to verify I am recording this webinar and we are good to go. Looks like we've got a full house right now. A couple people more are going to trickle in here, so that's always good, but we are going to get started. So first off, hello. My name is Jason Eichenlob. I'm one of the application consultants here at Rapid POS.
And my name is Chris Wilbur. I'm on the education and implementation team.
And we want to welcome you to our cost webinar, Understanding Cost in Counterpoint. So just a couple of ground rules that we want to go over real quick. First and foremost, we got a lot of ground to cover. So if you have any comments, go ahead and direct them towards the chat box. And if you have any questions, please direct them towards the question and answer box. All right, so we are going to try to get to as many questions as we can. If there's a question that's a bit too specific or something like that, we'd love to reach out to you after the webinar so we can talk with you one-on-one about it. All right, let's get started. So first off, going to go over just a little bit of an agenda here of some of the things we're going to go over today. First off, we're going to go over what cost actually is. Cost has a couple of different definitions in different industries. So we're going to kind of see in these different industries what cost actually means. We're also going to go over how cost is tracked in Counterpoint and also why you should track cost for your business and for your profitability. Then we're going to go to where to find and use costs in Counterpoint. And then lastly, we're going to do a little bit of a wrap up and questions and answers. So let's dive right into it. All right, so let's lay some groundwork here. First off, what is cost? Cost depends on what industry we're talking about. Manufacturing, cost could be the value of all the components, the labor, the technology, everything that you need to actually produce a product. So say, for example, you have a birdhouse and you want to sell this birdhouse. Well, you're going to need the tools, you're going to need the manpower, you're going to need the materials. All of this costs something, and it's all going to go into your final cost of goods sold, or COGS. You're going to hear that a lot during this webinar. The second industry, the one that we are going to focus on today, is going to be retail and wholesale operations. The cost of goods sold for this, it's going to be the entire value paid for having a product or a service to sell. That's going to include a couple of different things. First and foremost, it's going to be how much you actually paid for it from your vendor. And then secondly, well, you don't have this item sitting in front of you, so you have to get it to your location. Well, that's going to be shipping, duties, handling, etc. There's a lot of different miscellaneous charges that can go into how much something costs so that you can make a proper price for it. And then in accounting, a business incurs a couple of different costs to operate and to make sales. That can be something like advertising or labor or sales commissions. This is addressed in other parts of a business's general ledger. So we're really only going to focus on cost of goods sold for retail and wholesale operations today. All right, so how are inventory costs tracked? Well, let's take an example here. Let's say it's 109 degrees out, middle of California, and you're thirsty, okay? You go to a gas station, right to the back, right to those beautiful, wonderful fridges with all those different drinks. Well, you want a Coke or a Pepsi, and you go, you grab a bottle of it, and it's $16. Insanity. You go up, you pay for it because, let's be honest, pretty thirsty, and you walk out of the store. You are not going to forget that you paid $16 for this bottle of Coke. You're not. In fact, you might even go around and tell your friends that you paid $16. But here's the thing. You run a business. And in business, you're not just purchasing one item. No, no, no. You've got hundreds, if not thousands of items in flux at all times. And not only that, you might be buying the same item from 10 different vendors. Counterpoint is going to track all of these different costs. And that's something I want to show you just a little bit later here. So your inventory is dynamic. Now, on the accounting side, I just want to bring this up real quick. But accounting has a few different methods of tracking cost in inventory over time. You can do LIFO, you can do FIFO. I don't really want to worry about those right now. We're going to deal with average cost. And the reason for that is because Counterpoint uses average cost method for accounting for inventory cost. And with that, Counterpoint can also track costs by location. And so what this means is, let's say, for example, you've got vendor A that's close to store A, and you have multiple locations in this example. And then you've got vendor B that's very close to store B. You're not going to want to have all of your products coming from far, far away if you don't need them to. If you have a vendor that's closer to you, you don't want to have freight charges that are going to be through the roof. You're going to want something that's going to be close. And that's not always the case. But if you can do that, the point is Counterpoint can actually track individual costs by the location. So you don't have to worry about how much you paid at store A for a product at store B. Now, we're going to pass this on over to Chris, who's going to talk about why it's important for you to track costs in Counterpoint. Chris?
Yeah, and some of this is going to be pretty obvious, but cost is very important when you're talking about your profitability. It helps you to ensure that your business is profitable. Taking a moment to talk about profit, of course, profit is going to be your retail price minus your cost. That's how you're looking at your profit margin. And in that, I would also like to kind of address the difference between margin and markup. They may kind of sound like the same thing, but there is a subtle difference. So you can think of markup as the difference between your retail price and your cost, right? You can think of it as the cash in your pocket after your costs. Markup is a percent added to your cost. So it's a subtle distinction there, but just when we're talking about profits, I think it's important to address that. So moving forward, it also helps you to better decide what products to assort in your business. If I have two different products and they have the same or very similar profit margins, but one moves at a much higher volume, right? Of course, you're going to get a much better return on that higher volume product over time. It's also going to help you know when to adjust prices. So help you to drive sales, help you maintain your profitability over time. And then it's also going to help you optimize your supply chain, just like in the example that Jason just gave, where you have different prices from different vendors, just like how a customer is going to choose where they go shopping to get the best value. You're going to choose which vendor you're going to want to purchase from to maximize your supply chain and make it as efficient as possible. So let's go ahead and talk about the different types of cost. We're going to go through some definitions here. The first one, of course, is last cost. This is probably the one that you're most familiar with seeing. This is the per unit cost of the item on the last transaction that affected the inventory quantity of the item. So this you will remember, of course, when you are defining an item. That's where you're going to see that last cost. And this is probably the only time that you're ever going to manually enter the last cost when you're defining an item, because after that, your last cost is going to be updated automatically throughout Counterpoint as you do receivings on that item. As that cost fluctuates, perhaps on those different receivings, the last cost will update to reflect your last cost. And just a point there, I know that when you're defining an item, a brand new item that you don't normally carry, that might seem like a step that you would want to skip because you haven't received that item yet. The cost on that invoice may not actually be the cost that I'm going to be entering right now. So you might think that it would be best to just have that update automatically when you get that receiving. But we encourage you not to, just in the off chance that you do end up selling that item before that receiving gets processed, because that's obviously going to throw off your accounting. You're going to have now a record of that product being sold at 100% profit. And of course, your averages are going to be thrown off because the first record is going to show, again, zero cost associated with that item. So all of your accounting is going to be thrown off. So just in those off chances, even if you're not 100% sure what that cost is going to be, even an educated guess is better than just leaving it zero. And speaking of average cost, we'll go ahead and define that. So an average per unit cost of the item, which is derived from the per unit cost on each transaction that affected the inventory quantity of that item. And then we put in here, think last cost over time. So the type of average cost that Counterpoint actually uses, because like Jason said, there's the LIGO and FIFO method. Counterpoint uses the weighted average cost. And let's talk a little bit about that. So let's say you have two costs associated with an item. You have one item where you received it at $1. You have another instance where you received it at $2. The average between those two costs is, of course, $1.50. But let's say that first receiving, you received 100 units at $1. The second receiving, you only received one at $2, right? If you're only looking at those cost numbers and you're doing that average, $1.50, you would get $1.50, which is clearly not representative of the actual cost of these items. Counterpoint is going to put more weight to that receiving that had the 100 units on it. So the way that calculation works, it's pretty straightforward. It's going to look at the cost of all of those goods sold and divide that by the total number of those units for that item. So it's basically blending all of those costs together. And that's the cost that's going to be associated with that item when you ring it up at the register. Okay. A couple of other costs to define here. These you're not going to see quite as often. There is standard cost. It's also called default cost, depending on where you're looking at in Counterpoint. This is a cost amount you input as the default value, right? It's not an amount that's calculated by Counterpoint. It's similar in a way to your regular price, right? Going back to that defining items or those item records, you have your price one, which is your retail price. You have your last cost, and then you have regular price, which we train you to think of as MSRP, right? You think of that as your expected price, your standard price, if you will. Standard cost is like the cost equivalent of that. This is going to be an expected cost of this item that you manually enter. Again, Counterpoint's not going to do any calculation. It's not going to update that. If you ever do want to update it, you would have to go in and do that manually. And then you have serialized cost. This isn't going to apply to all of you. It's only going to track to those of you who track serialized inventory. But Counterpoint can track and show the exact cost of each serialized item. So a note that we put in here, Counterpoint will track serialized cost, but it will still use the average cost to calculate and report on margin and profit. So again, when you're looking at cost over time, even for serialized items, you're still going to see that weighted average calculation. But you do have the ability to track those costs on an item by item basis using serialized cost. So that's a little bit about the definitions of different types of cost. Jason's going to show you a little bit about where you can find some of these costs in Counterpoint, and he's going to show you some pretty cool tools that you can use to help you manage your costs.
Awesome. Thank you very much, Chris. Appreciate that. Okay, so just to go over something very, very quickly that Chris was just explaining, I want to show you something on serialized items about the serialized cost. Okay, direct your attention over to the left picture here. You can see in the red box, each of these different serial numbers has a different cost to it. And by the way, this window that we're looking at, this is something that would come up whenever you're going to sell a serialized item on touchscreen. So each of these serialized items has a different price to it. That's because, just like Chris said, the serialized cost, it is going to be tracked per serial number. Now, go ahead and take a look at the picture on the right. And this is what happens when we pull up the same exact item here. You're still going to have a last cost, a standard cost, and an average cost, which, as you can see, is different than the serialized cost. But we're going to get into this screen in just a little bit here. Okay, so where costs are visible in Counterpoint. We're going to start us off right at the most simple screen. This is going to be your items window. Now, if you don't know what this window is, you might not be using Counterpoint. This is probably one of the most common windows that is ever open whenever you're utilizing this system. And highlighted in yellow here, we can see the first one that Chris talked about, last cost. For this plant, we have a last cost of $10.07, okay? Now, you might want to ask, well, hey, where's our average cost? Where's our standard cost? Well, if you click on the bottom left-hand button where it says inventory, you're going to have a ton of metrics pop up on your screen. And this looks like the one from the last slide here, the inventory screen, where it will show you all of your costs all put together. So we have our last cost, just as you can see on the item screen. We have the standard cost here, which is something that, as Chris said, you will have to input. And then lastly, the average cost here, which is calculated, so you're not going to manually input this one. Now, this is what I wanted to show you from beforehand. I love this screen. This is the item zoom for this particular item, all right? So on this screen, we can see that whenever you click on vendor items, I've got a bunch of different vendors here, and each of them has a different unit cost. Now, last cost is something you're going to see on the item screen, but whenever you're putting it in a receiver, it's usually just going to say cost or unit cost. And so that's what we can see here today. We have all of these different vendors at all different prices. So say, for example, you are trying to find where best to buy something from. This is going to help you, especially if you deal with a lot of different vendors on a day-to-day basis. One other thing that I want to point out to you right now, go ahead and take a look at the unit costs and then directly to the left where it says purchasing unit. For each of these in Counterpoint, you can actually specify at what size unit you would like to buy from. So from Acme Lawn Accessories, we've got a purchasing unit of each at $22. But at Ag Pro Landscape, we've got a purchasing unit of a 12 case at $119. And it's going to track all this in the system here for you. A really, really good tool to use. Now, this is the one that I'm most excited to show you about. I did not know about this until after someone had showed me this and we were making this webinar. But this is something called cost threshold. So to get there, you're going to go to Setup, Purchasing, Purchasing Control, and then the Main tab. And then I want you to look right at the bottom here where it says Warrant of Unusual Cost. I'm going to go through what this means and how this works, but we would check the box here and we would put in a cost threshold. For here, we're putting in 10%, okay? So let's pretend like we're going to go and put in a receivings. Whenever we put in this receivings, we can see the plant here that we have before. And it looks like I'm going to get another 25 of them, though if anyone was paying attention on the last screen, it looked like I already had 1,900 of them in the system. So why not get 25 more? And it looks like we're going to bring this in at a unit cost of $12. Now you can see here that the $12, it's highlighted. With cost thresholds enabled, any cost change above the threshold, it's going to be flagged on your purchase requests and it's going to be flagged on your receivings as well. If I were to try and go save this, a little warning is going to come up. This is what I love here. It shows the difference in cost percentage, which here it's going to be 19.2%. If you remember from one of the previous slides, I put in a cost threshold of 10%. So this is over what I usually pay for this plant. And so Counterpoint's going to tell me that. There's a lot of different scenarios where this could be super, super useful for your business. One of those things, think about your receivings department. Can you think of anyone that might be just a little bit clumsy or fat-fingered? Well, let's pretend like we put in a last cost of $100 instead of $10. That's going to throw our profit way, way off. And so by having this kind of warning come in here, you know, if you're putting in hundreds of items at a time for a big business and they accidentally slip up on one of them, this is one of those error checking functions in Counterpoint that can help you out so that months down the road, you're not going back, checking out some trend analysis for profits on certain items, and suddenly at one point, your profit on this item just tanks. We don't want that to happen. And so a little bit of error checking like this might help you out.
And if I might jump in here real quick,
Please.
A nice thing about seeing this directly from the receiver is that behind this window is your price one, which is your retail price. And that's an editable field. So like Jason said, if you set this cost threshold and your cost is suddenly jumped up beyond that threshold and it gets flagged like here, it's asking you to take a second look at this. Did you make a mistake? And if you checked, and in fact, no, I didn't make a mistake, the cost did legitimately go up by that much. It's also a good way to maybe take another look at your price one, right? If your cost has gone up beyond your threshold, maybe you need to take another look at that and maybe make some adjustments, right? So that you're maintaining your profitability.
Awesome. I love that. We have a lot of clients that will go and they will base their new price one off of their receivings whenever they bring stuff in. And so having this little warning here, this is a perfect place to actually assist with you actually being able to put your new prices out. And actually, I'm going to pass the mic back over to Chris because he's going to talk a little bit about some of the reports that are important in here and where you can find some costs on them in Counterpoint.
Thank you. Yeah, and I'm not going to go too deep into these. We have a webinar that's already been done on useful reports in Counterpoint. As many of you probably know, one of the most powerful things about this system is its reporting capability. It can dive into, I think Counterpoint can do out of the box over 200 different reports, and almost all of those reports are customizable as well. You can add all kinds of filters. You can really dial into exactly what you want to see. There, like I said, a lot of different reports. These are a few that we think are pretty relevant specifically to costs. And like I said, if you're not familiar with these, I definitely recommend checking out that webinar so you can really utilize that functionality in Counterpoint. The first one is the merchandise analysis report, which many people feel is one of the, if not the most powerful report and flexible report in Counterpoint. You can see what percentage of the time you sell at retail price versus how often you sell at discounted prices. You can really dial in and see what your profit margins look like. It's just a very useful tool. Sales history report is a great one. It's pretty straightforward. You just set your parameters and you can really dial in on that. Sales analysis by group report is another really good one. This one, it really lets you get really granular with the columns. You know, you can put in validated returns, number of tickets, average tickets, I mean, all kinds of good stuff. And then the inventory history report. I like this one because it lets you see the change of costs over time. So we're going to go ahead and dive into this one just a little bit. So this is the path to get there. We've got inventory reports and then your inventory history report. Then we're going to go ahead and set our parameters, whatever time frame we're looking at, locations, etc. Let's go ahead and take a look at that actual report. Some of this might be a little difficult to see, but basically we're looking at one specific item over time. And we're seeing how that cost has changed over time, right? So you can kind of do like a trend analysis to kind of see how the seasonal changes and any other changes that might have impacted this cost. And again, just to get a little insight as to what's happening in your profit margins and with your inventory.
Nice. Okay, that's awesome. So this is the end of our prepared material right now. We want to open the floor to any kind of questions. Go ahead and use that question and answer box. If you do have any questions about costs that we might be able to try and answer for you here. Looks actually like I have a couple already in here. Let's see. All right. When I have serialized costs and I'm pulling a report on these, which cost helps reflect my profit margin? Serialized items are sold that average cost is not involved by default. Now, this is configurable. You can opt to use average cost instead of serial cost by going to Setup, Inventory, Control, Serial Costing checkbox. If checked, which that is our default here at Rapid, you will get serial cost for your costs of goods sold. If it's not checked, cost of goods sold will use average cost. Now, everyone usually prefers for this checkbox to be checked so that serial cost is always used. All right. Let's see here. Second question. If I put in the wrong cost, where can I change it? That should be a pretty easy one. So whenever you put in a wrong cost for something on a receivers or something like that, whenever you do that, you're going to want to make an adjustment, like a purchasing adjustment on that receiver so that it reflects the proper price. Chris, do you have anything else to input on that one?
No.
Okay.
Sounds right.
Gotcha. All right. And let's see. What if I receive items that are free? That is definitely an interesting question. I think that it would definitely depend on if it's the entire receiver or if it's just one of those lines. But one of the nice things about the receivers is there's a little button at the bottom called Document Discount. And if you have free items like that, you can enter in those discounts so that you can make those show up as free, but still have kind of a last cost on them.
Right,
Chris, anything else to?
without having it affect your average cost, right? Yeah, if
Yeah,
I'm not mistaken, if you receive items at 100% discount, you're not having a cost associated on that receiver, but your average cost, if I'm not mistaken, won't be affected if you enter those discounts. Yep.
gotcha. Okay, let's see here. Got a couple of other ones here. Got one talking about a sales report. Is there a sales report for end of day numbers that does not base margins off of average cost? That's an awesome question.
The flash sales report might be a good one for that.
Yeah. So like we were talking about before, the average cost, that is how cost is tracked through Counterpoint. So generally, most of them are going to be off of average cost. Attendee, if you would like, I can definitely reach out to you afterwards if you are looking for another kind of report that might do a different kind of cost like that. Okay.
Yeah, I'll go ahead and write that one down.
Yeah, that would be awesome. Thank you. And we have one last question here, it looks like. We don't want anyone to see the costs, but on purchase requests, we need them to enter the costs for miscellaneous items. How is this possible? That is also a really awesome question. Let's see here. There should be possibly some kind of maybe a modification or something like that. However, I think we are going to reach out to you probably by email to try and speak a little bit further on that.
It looks like
one.
Somebody's already sent an email.
Yep, I see that right there.
Perfect.
Sean emailed him. Wonderful. I like that. Quick response. Okay, and we just got another one coming in here from someone. Is there a way to change cost without receiving a PO? We buy a lot at local stores on the go for resale. Wondering if there is an alternative. That's also a very good question.
A lot of local stores on the go for resale. If you're talking about last cost, I'm going to say no. Last cost can only be edited and updated based on your receivings. So in this particular instance, we buy a lot at local stores on the go for resale. You would still probably want to do a receiving on those because you would, maybe these are items that you don't track inventory on. But if that's the case, then I would see why maybe you wouldn't want to go through the effort of putting in the receiving it. Is there an alternative? I'm gonna have to think about that when I get back to you as well. That's a good question, Cassandra.
From as much as I know on these, is whenever you actually go in to do your last cost, it is going to be done through receiver. That is the main way that Counterpoint actually tracks these and kind of bases it inside there. All right. Actually, we got a couple of other really good questions here. So here's another one. Is there a way to adjust the cost of items after the receiving has been posted? Yes, there is. You can go in and make an adjustment on those receivers to actually be able to change that cost. Chris, if I'm remembering it right, it should be under purchasing adjustment.
Correct. Purchasing adjustment. Yes, that would be the way. And that would probably be for Cassandra as well. I think that might address that.
Okay, gotcha. Yeah, that is true. Another one that came in here, actually, this is a really, really good one. I think this is something we missed here. Do miscellaneous charges get distributed in the cost? Chris?
Yeah, they do, but you can, it's a configuration. So you can choose basically whether you want it to be rolled into your average cost. So if you go into purchasing control, which is that same window earlier in the webinar where we showed where you can set that cost threshold, I think from that same window, you can also change how that gets distributed. If you want it to be allocated, in a different way, or if you want it to be rolled into your average cost for that item. Yep.
And I actually believe that there's a couple of different tabs where you can put on different miscellaneous charges. That there's something that may be custom for your store that you have to make sure you want to put in for your cost. You should be able to add those in as well so that it will weigh your average cost against those additionally. All right. You know what? Give me 1 second here. I am going to unmute Andy Smith. Wonderful, wonderful wealth of knowledge. Let me find him on here so I can allow him to talk. All right, Andy, you are unmuted.
Hey there. I just wanted to answer the one question about the person purchasing from a bunch of local stores for resale. A couple of things there. Number one, you don't have to do a purchase order. You just have to do a receiving. So you don't have to go through the whole two-step process, just receive. If you're not doing accounting integration, another option is for that little one-off thing, doing a quick receiver. If you're doing accounting integrations, it's important not to use quick receivings because they won't flow over to your vouchering process. But if you're not integrating into a financial system, quick receiving is another quick way to get something in and capture the cost very, very easily.
Nice. That's awesome, Andy. Thank you. And it looks like we have one more in here actually that just came in. Do freight costs get added into the last cost when receiving?
Again, it depends on into the last cost itself. No, it will. It can be rolled into the average cost, depending again on how you have that configured. But no, it won't affect your last cost.
The last cost is going to be exactly what you put in there. Whatever you input. Yeah, exactly. So it's going to be what's on the invoice. And then afterwards, with the average cost, you'll have miscellaneous charges, shipping, handling, duties, etc. that will all be kind of weighed in for that one. So great questions, guys. These are some awesome questions.
Am I still audible?
Yes.
Yes.
Yeah, so I just wanted to say with miscellaneous charges, you can track 5 different miscellaneous charges. Each one can have its own accounting treatment. So you may have one miscellaneous charge that tracks shipping by unit and allocates the cost of that for each unit on. You could have another one that it does it by cube dimension or weight, or you could have it where it's not tracked at all into COGS. And so then you could, depending on which field you enter it into, it would define the accounting treatment for that particular receiving.
Mm-hmm.
Very nice. Thank you for inputting on that one, Andy. Appreciate it. All right. And I got one more. Oh, it looks like it's not a question. I'm going to have Andy reach out to this one right here. Awesome. Thank you, Eddie, for that. Yeah, I'll have Andy reach out to you.
He just wants to know if he can have that answer emailed to him so that he can have it, so he can show it to his accountant.
Yep. Gotcha. Cool. All right. Let's see. Just trying to check and see if there's any other ones here. We got one last one that came in. How is cost affected when returning an item? Now, when an item is returned, the cost Counterpoint assigns when doing a return depends on whether the cashier uses validated or non-validated returns. A validated return will use the cost that was assigned when the item was sold. This is one of the many advantages of using validated returns, which we always recommend to do. And additionally, a non-validated return will use the current average cost. Now, this is true for both serialized and non-serialized items. One last thing that I want you to be aware of is that if you use the reason code scrap, the item is not returned to inventory. Instead, the cost value is used for a scrap entry. If the reason code is not a scrap reason, then a return reduces sales and reduces costs of goods sold. I've got one last question here, but I think we're going to deal with this one one-on-one. How can you change average cost when it has been wrong from the beginning?
Ooh, that's a good one.
Yeah, that's a good one. That's a little difficult. So
you could do inventory adjustment on that. You could adjust it back to 0. And then basically just to start from scratch on that. So that's what you're talking about, is starting from the beginning, right? That seems to me that would be one way to do that. You literally just adjust the whole, so you're starting from scratch, reduce it all down to 0. So you're starting from 0, and then do your inventory adjustment back up at the cost that you want to have associated to that item. If anybody else thinks
differently. Another hint that might be helpful would be if it's an item that has been sold out and you're about to restock it again, remember your costs will recalibrate. If with average cost, if there's nothing in inventory, the new cost you enter on that next receiving will become the average cost. So it's kind of self-correcting. If that's an item that you still have in your store, one thing you might do is create a new item that is identical, and then do inventory adjustments to adjust out of the bad item and move those to the new item. So just two other suggestions to fix something that's kind of a long-term nagging problem where you still have inventory.
Nice.
Couple
Nice.
of good
Thank you.
workarounds.
Yeah, especially I feel like it would definitely be difficult if you've had, years of this one item that you'd have to go through. So, Andy, I actually really like that process. I might use that in the future. All right. Don't see any other questions on here. I think we should be good to go.
Yeah, I've got a couple of
Awesome.
questions that we've written down. Will Armstrong, Cassandra, we're going to go ahead and look into those and get back to you with some solid answers on that.
Yeah.
But yeah.
Yeah. And just something real quick here, some next steps we've got. So if you could rewatch the recording of this webinar or some of the other ones, Chris mentioned a really great one. It's on advanced reporting. It kind of shows you how to go out and actually customize a couple of different things on your reports to get the information you want. So definitely want to recommend that one. If you still have some questions after this webinar, it looks like we can talk one-on-one. We would love that. Either schedule something with our education team, or you can reach out to rapidcares@rapidpos.com. It's here on the screen. And we can certainly talk with you about it.
And somebody asked, where are the webinars? They're on Counterpoint University. It's called, I think it's just counterpointuniversity.com.
Nice. Good catch on that one. And real quick, I did see one last question come in on here. Kyle Lambert asks, where do you normally enter shipping costs? It's going to be on the receivings. There's actually another tab for it for freight. So if you go one tab to the right, I believe, that's where you can actually put those in.
That's going to be a miscellaneous charge.
Yep.
All right. Well, thank you everybody for your time. Hopefully,
thank you guys so
learned
much.
something that you didn't know before.
Cool. Thank you guys for all coming out. And hopefully we'll see you around.